Welcome back to the channel. I'm Algabot, your guide to automated trading strategies, and today we're breaking down an expert advisor for MetaTrader 5 called Twilight Star Reversal. This is a pure price action strategy, which means it uses no indicators at all. Instead, it reads one of the most respected candlestick patterns in technical analysis, the Morning Star and Evening Star Reversal. In the next few minutes, you'll learn exactly how it spots exhaustion at the edge of a move, how it confirms a turn, and how it places its stop and target around real market structure. Let's dive in. Let's start with the big picture. Twilight Star Reversal is a swing reversal strategy. Its whole job is to catch the moment a trend runs out of steam and quietly turns the other way. What makes it interesting is that it does this without a single indicator. There is no moving average, no oscillator, no momentum line. Everything it decides comes straight from the shape of the candles and the structure of price itself. The pattern it hunts for is the classic three-candle star. In a healthy market move, you often see a strong push, then a pause, then a reversal. The morning star captures that at a bottom, and the evening star captures it at a top. The strategy treats this pattern as especially reliable because confirmation is baked right into it. You get an exhaustion candle, then a small indecision candle called the star, then a commitment candle pushing back the other way. This expert advisor was designed with euro to US dollar or gold, that's XAU/USD, on the 1-hour time frame in mind, although the logic works on any liquid symbol and time frame. The 1-hour chart gives the pattern enough room to form cleanly without the noise you'd get on very short time frames. For context, the strategy looks at raw swing highs and lows over a recent window. It only takes a long when the star marks the lowest low of that window, and only takes a short when it marks the highest high. That filter keeps it from trading random stars in the middle of a range and focuses it on genuine turning points. Who is this suited for? Patient, structure-minded swing traders who like clean rules and counter-trend reversals. This is educational content to help you understand the logic. It is not a promise of profit, and every strategy carries risk. Now let's walk through the exact logic, step by step. The strategy acts only once per freshly closed bar, and it only ever holds one position at a time. When a new bar closes, it looks at the 3 most recently completed candles. We'll call them A, B, and C. Candle A is the oldest, candle B is the middle star, and candle C is the most recent close. For a long trade, a morning star, the strategy detects 3 things. First, candle A must be a bearish candle with a meaningful body, showing sellers in control. Second, candle B, the star, must have a small body relative to its neighbors, showing that selling has exhausted and the market is undecided. Third, candle C must be bullish and must close back above the midpoint of candle A's body, showing buyers have committed and reclaimed lost ground. On top of those 3 conditions, the strategy adds a structural filter. The pattern must own the lowest low of the look-back window. In other words, this has to be a genuine swing low, not just a random pause. Only when all of that lines up does the EA signal a buy. The short side is a mirror image. For an evening star, candle A is a strong bullish candle. Candle B is a small star, and candle C is bearish and closes back below candle A's midpoint. The pattern must also print the highest high of the window, marking a true swing high. When that aligns, the strategy signals a sell. Risk management is built around structure, not guesswork. For a long, the stop loss is placed just below the lowest point of the pattern, plus a small buffer that's a fraction of the pattern's range. For a short, the stop sits just above the highest point, plus that same buffer. The distance from entry to stop becomes the risk unit. The take profit is then set at a fixed multiple of that risk, so a setting of 2 means the target is twice the distance of the stop. The strategy also checks that there are enough bars and that the candles have real bodies before it ever sends an order, so it won't react to flat, lifeless price. Let's follow this chart from left to right and watch both trades unfold. Notice there's no oscillator panel here because this strategy reads price alone. On the left, the market is sliding lower. A strong bearish candle prints, showing sellers firmly in control. Then comes a tiny candle right at the bottom, the star, marking the lowest low of the window. That small body is the tell that selling has exhausted. The very next candle closes strongly higher, reclaiming the midpoint of that first bearish candle. That completes the morning star, and the strategy signals a buy as the new bar opens near 1.0872. The stop sits just below the swing low, marked by the green support line, with a small buffer beneath the pattern. From there, price climbs steadily, candle after candle, until it reaches the take-profit level near 1.0936, a clean exit at a fixed multiple of the risk. Now watch the right side of the chart. Price has rallied into a fresh high. A strong bullish candle prints. Then a small star forms right at the top, marking the highest high and tagging the red resistance line. The next candle turns bearish and closes back below the midpoint of that bullish candle. That completes the evening star, and the strategy signals a sell near 1.0938. The stop now rests just above the swing high. Price then rolls over and falls, reaching the take profit near 1.0868. Two patterns, two structural stops, two targets, all read from the candles themselves. This is an illustration for educational purposes, not a prediction. Let's go through the settings you can adjust and how to think about each one. The first is lots, which defaults to 0.10. This is your position size on every trade. It's the most direct control over risk, so size it to your account and your own comfort, and consider keeping it small while you study the behavior. Next is SwingLookback, defaulting to 10. This is the number of bars the strategy scans to find the highest high and lowest low. A larger lookback demands a more significant swing extreme before it will trade, which means fewer but potentially more meaningful signals. A smaller value makes it more sensitive and more active. You can set this anywhere from 3 up to 40. Then there's RiskReward, defaulting to 2. This sets the take profit as a multiple of the stop distance. At 2, your target is twice as far as your stop. Raising it aims for bigger moves, but lowers your hit rate, while lowering it toward 1 does the opposite. It ranges from 1 to 5. StarBodyRatio defaults to 0.5. This controls how small the middle star candle must be compared to its neighbors. A lower number is stricter and demands a tighter, cleaner star, while a higher number is more relaxed. It runs from 0.10 to 0.90. Finally, BufferFrac defaults to 0.10. This adds a little breathing room beyond the pattern extreme when placing the stop, expressed as a fraction of the pattern's range. A larger buffer gives the trade more room, but widens your risk. Tune these together and always test changes before using them. And that wraps up our breakdown of Twilight Star Reversal. We covered how this pure price action expert advisor reads the 3-candle morning star and evening star pattern, how it confirms reversals at genuine swing highs and lows, and how it builds its stop and target around real market structure. We also walked through every parameter and how to run your own backtest. Remember, everything here is for educational purposes only and is not financial advice. If you found this useful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.